Now that we've covered database basics, let's look at what this looks like inside of an enterprise system. So large database systems that are used by large organizations. An enterprise system database is generally going to have two types of data. You're going to have transactions, which is data that is updated frequently, and also generally large. So if you think about transactions like sales orders or purchase orders or shipping documents, you're transacting a lot of business over time, and so you want to track all of these individual transactional data. In addition to transaction tables, we're also going to have master data tables. And master tables are generally describing objects, so things like people, places, and things. They're updated infrequently. So whereas a transaction would be updated each day, we're not going to change a customer's address, except maybe once every several months or years. These are generally smaller tables compared to transaction tables, and they are required for the transactions to take place. One way that we organize databases from an accounting point of view is using something called the REA model. And REA stands for resources, events, and agents. So let's look at this structure model as an example. When we build this into a structure model, we are going to start with the events, or those transactions that we want to record. So let's say that we want to record sales, and we want to record cash collections. These are two events that represent this transactional data, and these two go hand in hand. We record a sale, and we have a cash collection that corresponds with that, so we call this a duality. Each transaction, remember, has two sides. We give something, we get something in return. Once we have done that, we're going to go to the second step, which is looking at the resources involved. So what is it that we are selling? Well, we are selling inventory. And what are we collecting? The resource we're collecting is cash. So these two objects are master data, meaning we're going to record all of the different list of items in our inventory and the bank accounts where we store our cash. Finally, once we have our events, those transactions, and our resources, we're going to include the third step, which is identifying the agents. And the agents typically require two different types of agents. We have an internal agent, meaning someone who works for our company, and we have an external agent, which would be a business partner. So in a sales transaction, if I record a sale, for our internal agent, we're going to have an employee who would include our salesperson making the sale. And the external agent is going to be a customer. Likewise, with cash collections, that customer is going to give us cash, and it's going to be collected once again by an employee, probably a cashier. So what type of data are these agents? Do they change frequently or do they change occasionally? Well, we would expect employees and people and things to all be examples of master data. Just to reiterate the fact that in a database system like this, there are no journal entries. Meaning whenever we record a sale or a cash receipt, there's not a journal entry taken. We're just including a line in the database. But just to help you understand what's going on, when I record a sale and I'm transferring that inventory, that event, the fact that I'm pulling inventory from my inventory and recording on a sales order, means that I am going to increase my cost of goods sold, and I'm going to decrease my inventory. So that one line of code represents the journal entry transaction. When I record the sale, that is going to be an increase to my accounts receivable that involves my customer, and that's going to be an increase to revenue. So that one single line showing that sales order is going to represent the accounts receivable on the revenue side. When the customer pays us, that's going to be a decrease in the accounts receivable for the customer. And when that cash is deposited, that is going to increase our cash, and it's going to decrease our accounts receivable. So all of these journal entries that you're used to are represented by these two line items, one for the sales order, one for the cash collection. And we'll use queries to build the financial reports off of that information. So one other caveat, with the REA model, this is a really great accounting model because it's intuitive and makes sense. It's not really used in a lot of large enterprise systems. There is one tool called Workday, which is a cloud-based enterprise resource planning system, or enterprise system, which is a cloud-based enterprise system. And they built their database to be more efficient and follow this transaction. Tools like SAP and Oracle are so large and complex and have data in so many different places that it doesn't really match the same model. We can still use this model later on when we're doing data analysis, when we're trying to pull data and to build analytical models based on this. One thing we do see in enterprise systems are data warehouses. Data warehouses are copies of the production systems that allow us to do report generation and financial statement creation and so forth. And what this does is it pulls data from a lot of different sources into one place that we can break apart and show different views to different people. So over here on the left, we start with our operational databases. Sometimes we call these production databases. So I may have something like, here I have an SAP system, here I have an Oracle system that are dealing with different functions of the business. And I may have other data sources, such as Excel sheets that are used for calculation. So I bring them from the operational part into what I call the staging area. And the staging area is we're going to take all of those different tables and fields, and we're going to map them or translate them into a common data model. So my data warehouse is going to contain all of that data. We sometimes call it a data cube because it's multidimensional data. This is going to be my common data model. And think of this basically as an offline backup, meaning it's a backup copy of our system that doesn't impact our operations directly. From our data warehouse, we may break this apart into smaller subsets of the data. For example, the financial accountants don't need all of the human resources and production and planning and other things that they would need to generate financial reports. So what we do is we take that data warehouse and we break it apart into data marts. Think of these as little miniature data warehouses, or little subsets of that large data warehouse. So we may have a cube for sales, and another one for marketing, and one for accounting. And then finally, this last stage, we have schemas. Schemas are different ways to view the data. So for example, the sales manager is going to look at the data to make sure that we're meeting goals and expectations, and who gets bonuses for the quarter. A general manager may be looking at marketing spend and determining whether we are getting the return on that investment or not. And an accountant is going to check those account balances and the daily profit and loss to see that we are earning more money than we're spending out. So all of this works together to pull the data from that centralized database, or those multiple database systems and data sources, so that we can use it to provide business intelligence and understand how we are performing as a company. We'll talk a little bit more about this when we get into data analytics later on in the semester. In the next video, we're going to talk about SQL and how we pull some information from these databases.